Hello and welcome to this briefing, where we'll be going through a comprehensive anti-scam framework that financial institutions can use in 2026. It's based on a pretty in-depth piece of research that our two speakers have carried out. They took a look at banking controls for scam prevention that banks are implementing with success across the globe. And we're going to be talking through some of the most important things that you can be taking into your own organization. As we chat through this, we'd love to hear from you in the chat. So please feel free to introduce yourself. Let us know where you're dialing in from today. Or as we talk about certain measures, please share your own experiences or any comments or questions for the speakers. We will endeavour to answer questions as we go along. So, time to introduce the speakers. My name is Lizzie Clitheroe. I head up corporate marketing here at Altsia. And we are blessed to have Ken Paller with us today as one of our presenters. Ken, would you like to give a quick introduction to yourself, please?
Yes, indeed. So I'm Ken Paller. I was at MUFG Union Bank from 2005 to 2019. I managed online security for both our retail and commercial users, and I was responsible for identifying our security gaps, finding solutions, and actually deploying them. I retired in 2019, and I've been working as a consultant for a number of banks and vendors, doing a lot of things, but most recently, my main focus has been on consumer scams, and that's what gets us to today, where we have this report on consumer scam controls.
Somebody who's technically retired, Ken does a lot of great work still in this space, so we're blessed to have you. Thank you. And Ian, introduction, please.
Thank you very much. So I'm Ian Swain. I'm the Principal Fraud Strategist at Altsia. I've got a background which is relatively similar to Ken's in that I used to work in a bank. I then consulted for banks, and then I've worked in the product space for about the last 9 or so years myself. And I've also been fortunate to know Ken both as a professional colleague, but also as a friend for around 10 of those years.
Indeed.
Awesome. It's a small industry, lots of people who are very passionate about fighting scams and fraud. So before we delve into the meat of the presentation, I wanted to take a moment to just frame the problem. And this is a bit about how Altsia sees it. So Altsia, we've been at the forefront of fraud prevention for 20 plus years, and most of that time has been dealing with unauthorized fraud. And I'm guessing that a lot of people dialing in today, a lot of your expertise and potentially your experience is really focused on that technical attack surface that you see on the left of this graphic. But we've seen with the explosion of scams and the industrialization of scams that it's opened up this whole new emotional attack surface, as so many attacks are done through coercion, they're done through manipulation, and you're trying to trick really like good customers into doing things that is not in their best interests. And as a result, we're grappling with a compound attack surface to change the game. And it's always worth taking a moment to reflect on the gravity and the stakes how high the stakes are here. You know, especially for scam prevention, we are dealing with victims who potentially lost their entire life savings and dealing with the financial fallout of that, but also the emotional one as well. The shame, the loss of dignity can be devastating for scam victims. So that's why it's great that the industry does really come together to work out how to best deal with this. And as part of that, Ian, you have put together this framework that is based around the scam attack chain. So if you could talk us through this, how does it work and how does this help banks really think about the problem?
Thank you very much. So the first thing is, as Ken and myself were looking at the controls, we realized that there was a whole batch of controls, but actually, how do we make it more relevant on there? We went through, and what we applied on this was actually to go back to what the cyber world's done for around 20 years or so, which is the concept of a kill chain. But we went, well, what's a fraud one? Now, other people have done work on fraud attack chains, fraud kill chains. We use the word attack chain because of the fact that people are actually dying at both ends of this, whether they're actually people who are being murdered in the scam centers or whether it's victims who are paying the ultimate price for losing everything, unfortunately. So as part of the attack chain, we're thinking about what goes on across the entire journey. The same way a banker would actually think about the customer journey, we're thinking about the victim journey here. So really, in short, it's a strategic level positioning of what's going on. It's not getting down to the nuts and bolts, down to an incident level piece. And as simple as is, what are the bad guys doing first? What are they doing ahead of the attack? What are they building up? Where can we put controls in there? How are they actually compromising the victim? So what are they doing to start to get in the coercion, the financial grooming side? What are they getting inside the victim's head? What can we do there? Then the bread and butter is the transaction, which is really laying what we've already done in the technical attack surface. It's actually thinking, what can we do in the emotional attack surface to actually put additional controls around there, deal with it. Then we move to where the money's going to, which is becoming the new battleground. That are the money mules. You know, they are the bottleneck for most scams still, and it's where we can actually get signals there, which may be stronger than that actually of the sender. And then unfortunately, we've got to consider post-attack. What happens when a scam has been successful? What can we learn from it? How can we still get the data from that to actually move it back to the start of the chain there? Take it into more of an intelligence loop rather than just a linear process.
Yeah, I think that's a really helpful way to frame what comes next. Will we be going deep into some of the controls, but to actually think about it in these stages. Ken, from your experience working with banks and in banks, is this something that banks, a lot of people thinking about it in this way yet?
I'm not sure they think about it this way. I mean, a lot of times we're talking about what are some of the different controls, but it was interesting when I put all these two controls together and then working with Ian on the report, this concept of putting a framework to it was really valuable. And so I think this is a good way for people to think about it and look at the different sectors of the chain and see if they have controls for it. But I'm not sure everyone thinks about it this way.
Yeah.
The other thing around the chain is the earlier you can actually interdict, the more of a force multiplier you're going to have. So if you can do things around the victim compromise rather than transaction, you're reducing the overall volume of victims that could come in.
Right.
Yeah, and that point leads us nicely onto the first area of focus, which is pre-attack. And for those who are watching in a bank, you'll see the banks aren't actually represented here. This is really looking at the ecosystem. Banks are often at the sharp, pointy end of scams, as that's where the transaction happens. But as we all know, there's a great deal of things going on upstream to lead somebody to a point where they might be making a scam transaction. So, Ian, talk us through how you frame this and how you see the pre-attack stage and the different players here.
Yeah, I'm not going into the technical side of the pre-attack. Others have done a lot more work on that. But in terms of controls, well, we think that the ultimate arbiter of controls is going to be the government or a regulator. So what are they setting out in terms of the guidelines there to actually prevent? You know, what are education, what are controls there? How does it influence, you know, further down the chain? We've seen examples there where we've got some stuff which Ken's going to talk about later, the Australian scam framework there. We've got the Singaporean government doing it. We've got national scam centres coming in. So they're taking a holistic view of what's going on. And even though it's pre-attack, it's feeding across the whole of the chain. The digital platforms, unfortunately, they are used to support the attacks in a lot of cases. Let's be blunt about it. We see an awful lot of successful scams being launched from social media now. It's moved from the classic old bits on the digital platforms with the websites and the domain name infrastructure. That's still there. That's still being abused. But actually the digital platform, social media, they're coming through. And what should they be doing? What could they be doing more? I think is the question that's a lot of people's.
Right.
I'll skip on the dating because Ken's got a view around that, and I'll jump onto the telcos. Again, alongside the social media, you know, we've got the other messaging, the traditional messaging, whether it's a voice call on the plain old telephony system, whether it's an SMS or a message through there. People like the GSMA have actually learnt from what's gone on at the country level. So we look in the UK, for instance, where I'm from, we've had a lot of blocking that's gone through of spoof numbers, of numbers coming in from overseas for impersonation of short codes, etc. GSMA's taken that and they've now pulled that into a bunch of controls, which actually are both preventative, but also can be detective and can be used for the banks in the later parts.
Yeah, it's good to hear those good examples of action being taken across these sectors. And Ken, would you say that broadly these different entities are taking the scam challenge seriously?
Well, I think the best place to look at is the dating platforms now, and especially Match Group. I'm really seeing some improvement there in the know your customer controls. And I think they're realizing that the whole dating platform thing is changing and customers are getting much more concerned about who they're talking to. And so Match Group has taken some very strong initiative there in a number of different countries. So that's probably the best thing when we talk about the digital platforms. And back on the governments are really driving a lot of the changes that we see. And when we talk about controls later on in this presentation, a lot of it's because governments, especially in Southeast Asia and Australia, they're really stepping up, and they're telling the banks they have to do things, or looking for banks to do things, looking for voluntary commitments on the part of banks. But a lot of that's government driven, and it's having a very good impact. So that's why it's here on the pre-attack, because they're trying to get people to pay attention before there is a loss.
And there were a couple of specific initiatives that you both wanted to call out of, again, kind of good news stories. Ken, I'll throw the first one over to you, talking about what's going on in Australia around website takedowns.
Yeah, Australia is doing a wonderful job as far as taking down websites that have suspicious activity having to do with scams, and they don't wait till someone has a loss. If they can identify it, they're taking it down. And that's part of regulation and legislation in Australia that allows that. But it's probably the best example of being aggressive to go after scam websites, and I applaud what they're doing there.
And Ian, a couple other examples that you were going to call out?
Yeah, I think these are the other ones which are, coming again from some of the government initiatives and pushing it through, where the fraud risk indicator is the fact that you've got something coming in. So maybe it's not automated, but it's actually that business to consumer, where people can go, well, is this number looking suspicious? Can I go and search it? Doesn't always work if you've got a real-time scan going on, but if it's a longer term one, you can look at it. And then with what's been done in Malaysia, where they've got this single point of contact there, they can call through. The UK has actually done similar around that themselves, to actually see what's going on. But it touches on one of the key issues there, in that, as you're going through pre-attack, or they're starting to do things, how do you check it? But some of these actually still come in later in the chain as well.
And then moving on to what is much more in a bank's sphere of influence. So we're thinking about the victim, communicating with victims, and how to avoid your customers becoming a scam victim. So Ian, could you talk us through this part of the attack chain and the different areas that you think banks should be taking into consideration?
Yeah, so we look at this. This is the first point at which the banks actually have skin in the game, to be fair. They're seeing what's going on. You've got the scam victim is on their sites, they're using the mobile app. But what can you do preventatively, well ahead of a transaction on the account controls? What can be done there to actually say, well, are we actually looking at you as a high risk for scam? So by default, should we actually be leaving you in a potentially vulnerable situation? Should you be able to make the maximum amount of payments? Should you be able to send stuff to someone else? What other things should we have there to actually validate that what you're about to do is actually legitimate? And that ties into that customer empowerment, where are you setting it as a blanket level for certain groups or certain stratas of customers, or should the customer themselves have the ability ahead of time to turn it off or do other pieces? The other two, I'll pass to Ken, because he's done a lot of work around this, because this is around some of the behavioral science piece.
So when we talk about the bank staff, I think this is an important area. There's an awful lot that the bank staff can do, and therefore they need to be trained from a psychological perspective of how these scams occur. And then psychologically, how do you want to talk with the customer? Based on how you talk with the customer, you could make it better or worse. And so it's important for staff training to take place. And it involves the branch staff, but it also involves the fraud people, because as they get alerts, sometimes they're the ones that call. And sometimes the bank staff or the branch staff need that expert in the bank to pull into a call with a customer, because recognizing the customer has been groomed for weeks and months, it can be very difficult in a 5-minute conversation to get that customer to agree and be convinced they shouldn't send the money. So that's, to me, is one of the most important. You touched on customer empowerment, but give the customer some choices in these controls. And I think that's very valuable, and we'll talk more about that. But I think those are two that are really key on this.
Yeah, some great points. I think that it's all very well raising an alarm with a customer, but if you don't actually understand the the psychology of a scam and why people would get into that position, people might not do a very good job of that, and that's such an important.
Correct.
And so delving into some of the more specific controls. So Ken, what are some of the most effective things that you think can be put in place to help banks navigate this?
Well, the first one I would look at is the customer transaction limits, as I was talking about just a minute ago, allowing the customer to set these limits. So maybe if I'm doing faster payments, let me choose the time of day I want to do it. Maybe I just want to do it from 8 to 5. And if all of a sudden, if I get involved in some interactive scam thing at night, I can't do the transaction. Or maybe I set the dollar amount limits. So that customer choice in the controls, make them part of the solution. The second thing I would look at that's very innovative these days is the AI scam detection assistance. We're seeing a number of vendors come up with solutions where they're helping the customer identify, is this text message look legitimate or is it a scam? And so you can basically, it could be an app that sits on your phone, and so it'll scan the text message and then give you a warning on it. We're also seeing in line with that, Google is adding more controls right on the Android operating system. And iPhone, with their most recent operating system, is doing some similar things where they're pulling the messages that aren't on the contact list, they're pulling them to another sort, and so you don't see them so visibly. So I think that can have a big impact. But there's a target on, if there's a text message coming in, people are coming up with some solutions to look at that and help the consumer decide whether to interact with that text message or not.
Yeah, and it's nice that different industries are thinking about it, because I've seen AV vendors put some solutions like that in. Some of the banks are, Google. So I think a lot of people are kind of trying to think through how to detect and help consumers realize when they're in a scam situation.
And these things really involve the consumer in the solution part. And that's what I like about. Too often we're looking at things, what can the bank do? But the consumer can definitely help if we give them the right tools.
Yeah, and I think that ties into the couple that I wanted to pick up. I mean, the bank call status, I think, is a very useful thing. We're seeing more and more. The fintech started it. So it's a case of, if you've got a phone call and it's, I'm your bank, hello, this is your bank. Well, what you should be told by your bank is you go into the banking app, there you move the phone down, actually things like behavioral biometrics, and see what's going on there. And you go, I'm logging into the bank app, and it goes, this is or isn't a call. Most likely isn't a call from you. But as Ken says, we've now got the fact that even some of these are going, if you're trying to now go into a banking app on a call, things like the latest Android are going, no, you're not going to do that. They're actually going to say this is higher risk. But I think it shows that it's starting to cut down the volume going through it. It's changing that cross-channel piece where it's that real-time piece. The other one that I like is the idea of the scammers. So this is where, again, we've got AI being used. We've got people almost baiting and putting honeypots in place. And I've seen this back in the early days of the technical attacks, going back 20 years ago. You know, used to honeypot malware and phishing, and you can go through. This one's real-time AI going, I'm chatting with your chatbot and I'm trying to get the mule details out of you and get information about what's going on, as well as blacklisting that number and seeing what's happening. I think those are really cool. The other one that I just wanted to pull out, which I think is good and it ties in, is it's not just at this point in there, it's actually almost in the next step as well. And that's making it easy for the customer to say, I think this is a scam or whatever there, and being able to pass information through, whether that's to the bank, whether that's through to something central, like, you know, we've got Stop Scams UK, for better or for worse, but they're there, or an anti-scam center in Singapore or similar, being able to feed it in. And then the money lock's an interesting idea, where if you've got a bunch of savings, you go, well, here's my normal day-to-day money, but this bigger pool of money, that is actually locked away. I can't move that online. I can check the balance, but I can't get to it. I've got to go through more hoops and to jump through. And this is when the bank will ask, why do you want to do that?
And one of the things to highlight here is, notice all the countries that we show here. So this isn't just one or two countries doing things. We're seeing a number of countries around the world coming up with scam controls. And I think that's very important to call out. A lot of countries and the financial institutions in those countries are jumping in this fight. And I'm really happy to see that.
Yeah, and what's interesting is as we go through all of this, how few European ones have actually put stuff in there. And that's, we've got PSD3 coming out, which is looking at the APP, and they're doing a bit of the regulation. But it's, some are regulating ahead of others. We do have capability more ahead in some regions than others, shall we say.
So moving on to an area that is a really robust area where banks can influence is around the transaction point. So this is the last line of defense before a scam actually, the payment takes place. It leaves the company, the account. Ian, what's the sort of the 4 different areas they should be looking at within the transaction point?
This is one which should already be in place, but it's interesting how some of it is not as effective for scams because it's been designed for a technical attack surface. Transaction monitoring should have that. Transaction limit controls, those have been, as Ken was saying earlier, you know, what is the daily limit? What's the monthly limit? What's your velocity on there where you're looking at that? The customer notification, I think, is one whereby in the past it's notification post-transaction, you've done a payment, or as you're authenticating, you have it coming through. Whereas now we're seeing more about before the payment goes through is how would you know the person you're sending this to? What should you be doing? And then the training the bank staff, as Ken has already said, is you made the transaction, you're then flagging it, you're stopping it. How do you then stop a catch and release? How do you actually get it so that you found the scam? How do you deprogram the customer so they don't go, that was me, I really want to make this payment, and then 5 days later they go, no, I really don't want to make this payment, I want my $100,000 back, please.
That's what we want to avoid.
And that's the dirty secret. Banks are catching a lot of fraud, but the victims themselves, because they're being financially groomed, they're not even victims.
Right.
They are being so controlled by these financial grooming that they're told what to do and they believe them. And that's the key thing where it's breaking the spell again.
That's also an inherent challenge in scam prevention versus the sort of the unauthorized fraud, that it's the right person, it's the right device, they want to do this transaction, yet what signals can a bank look at, preferably in real time, to think, no, this doesn't, that deviates from their behavior, or this is potentially going to a bad account. So Ian, what advice would you give, and what are the best controls that banks can leverage to do this real-time monitoring for a scam prevention perspective?
You've got to have a real-time fraud monitoring platform at your core. You know, even if you're not in a faster payment jurisdiction, I'm looking at Ken and your area of the world there, the US, which is moving towards it, but you need a real-time fraud monitoring system. You need the ability to actually add more and more data into it. You need the ability that you can actually go, well, what are we doing proactively to go, well, should you be able to make large payments to high-risk channels? And I'm thinking, should you be able to dump your entire investment portfolio into a crypto? Should you be able to dump your entire, retirement fund into it? And the answer should be, well, it's about, just because you can doesn't mean you should actually enable it now. Because what's the likelihood of that actually being a genuine thing someone does? Maybe 1% to 99% is scam guidance. The other one that I wanted to pull out before I go to Ken is that behavioral biometrics. I've been very lucky in that I've seen the entire development of this. I've seen it move from an authentication strategy and more of a technical control into something that deals with the emotional attack surface, where you're looking for the anomalies, you're looking for those signals there. You're finding where people may be being, that grooming that, and walk through what they should do. It's very strong. There's more to come from that. There's more being developed. We're doing that here. We're moving with the next generation play around that. But it's the fact that you're trying to go behind the device now, because as you said, it is the customer device. It is the customer. It's just they're convinced that what they're doing is the right thing, whereas it's absolutely contrary to the best interests.
It sounds like the bank should be looking at what action the customer is making through the transaction, but also how they're making it, some of those behavioral signals.
Yeah.
And being able to view them at the same time within the same real-time fraud monitoring system. Yeah. Yeah. Ken, what's some of the important things that jump out from you at this stage?
Well, right in the middle of this slide, network level analytics, I think, is one of the biggest things. It's up and coming. I'm actually doing a lot of research on that right now. But let's look to the UK. The payment operator Pay UK uses Vocalink, which is a MasterCard company, and they produce an awful lot of analytics based on the network data, and they make that available to the banks. And so the banks are starting to get information on the receiving bank side about transactions. So I think that's a really significant one. And I think it's going to become much bigger going forward. There's a lot of opportunity around the world for the payment operators to use the network data that exists, that's buried in the transactions. And I think, as Ian talked about, the banks having the fraud level monitoring and all the analytics there, I think that's the next thing is going to be on the network side with all these payment operators. So that's a big one to really watch. The next one there on the bottom left is the active voice call, the ability to tell where the bank can tell, is the customer on a call when they're doing the transaction? And statistics are showing that that's a very key indicator, along with other signals, as is this potentially a fraud transaction? Because oftentimes we see the fraudsters on the call with the customer/victim telling them how to do the transaction. This is part of what Ian talked about before on the telco side as a positive and a call out for the telcos, where with GSMA and their set of Chimera APIs, there are a lot of risk controls, risk signals that the telcos can provide. And it's really happening around the world because GSMA is the International Trade Association for Carriers. And so we're not seeing things just in one country again. We're seeing it being available around the world as a solution. And I really love that.
That's brilliant. Yeah, and active call is an interesting one, especially when combined with something like behavioral biometrics.
Mhm.
'Cause you can
Yes.
see it on a call, and then you can look for motions that they're being guided, and that's a big indicator of scam activity as well.
And that ties in, I think, what you're saying now is you've got contextual questions have started being used in the UK. They've moved to Australia. What's the purpose of this payment? Are you buying something? Where did you come through on that? Where do you see it? Social media, eBay, similar, and they're trying to go through. But I think that the next evolution of that, and some of the work we're doing internally at Outseer with, what we're terming adaptive intervention, is how can we actually take all of the signals, from a scam model there, from a behavioral biometrics data source, from the device, from looking whether there's a voice call, where you start tailoring those with AI, and that becomes very, very interesting. And of course, that then leads into the fact, two of the other things that you take in, say, external intelligence, which you can take in from people like the GSMA or similar there. But then once you've actually got the fact that this looks suspicious before the transaction, do you then move to actually holding that? How do you break the spell? Where actually there's legislation that's starting to come through, and Ken's going to cover more in Australia, that you're putting the sand in the gears, where you see something's there, something's wrong. Even if the customer is rung up and says, I want to release it, you're holding it for certain hours or even a day or so. And I think that's the fact where you're spotting it in real time, but that interdiction may actually be that day +1, because people need to sleep on it, and they're going, oh my God, I'm transferring $50,000, pounds, whatever, to someone there. And they're suddenly going 5 hours later, the spell has been broken. They're like, God, I don't want that. And the bank is now going, right, do you really want to move the money? No, please return it back in. The bank can see the signals. They know what's going on in a lot of cases. It's now to the customer, they need that cooling off time. And I think that's going to be one of the things which is going to probably come in more over the next year or 18 months, and it's probably going to go wider. Again, it's what we were saying, payments are high-risk channels, or high-risk payments. Just because you transfer immediately, do you really need to nowadays? If you're going to buy a car, for instance, you're going to go there probably the next day. You don't go, I'm going to spend tens of thousands on a whim. Some people might do, but most people are going to be a little bit more measured with their money, I suspect.
So, Ian, you've taken words out of my mouth when you talked about contextual questions. And this whole thing of contextual questions and agentic AI, in my opinion, is going to be another big control. The ability to come up with the questions once you're talking to the customer, if it's an online type session, or maybe the fraud analyst is talking to the customer on the phone. If you can take how the customer responds and use agentic AI to come back with the next question, I think that will be powerful, because it's almost like you want a psychologist on your shoulder when you're interacting with the customer. They'll say something, and if the psychologist was there who really understood this, their whole lifelong thing is understanding psychology, they'd say, well, ask them this question. And I think we're going to see more of that. So that's another big call out for the future.
Yeah, we're speaking with a behavioural scientist at the moment trying to understand this, because you say it's almost going back to the old thing of bad guys in the technical account tax service. They knew what rules were. They would go, well, you've got a rule at $3,000. I'm going to try 2,999, 3,001. They're going to work out where it is. The same with just static questions. Well, this is what they're going to ask. This is what you've been groomed as the answer. Whereas now you don't know what the answer is. It's a way of actually breaking through, because they're a human being. Even if they're controlling them, they're not going to be able to go in real time. They're going to, and again, it just feeds back into breaking that grooming side of things.
Well, Ian, I want to call out the presentation that Outseer did in October with some behavioral psychologists from Toronto. People should go back and listen to that, because that 1 hour discussion was all about what we've covered in the last 5 minutes.
Yeah, we can put the link to that in the chat. Two experts from Deloitte. That was a fascinating discussion. And with that, what we call adaptive intervention, I quite like the fact that, as we know, Gen AI has exacerbated and fueled scams. It's so much easier to have these very targeted, personalized messages out there. You hear about voice scams, we're impersonating people's voices, a loved one. And also being able to execute campaigns across multiple languages flawlessly. So we all know how this is being used for evil. So it is really nice to know that there's moves afoot to actually be able to use Gen AI to help communicate with customers. And because I guess the banks, they've got a few jobs here, right? Is to detect the signals, to decide how to intervene with a customer and potentially get that back and forth to try and persuade them that they're doing the wrong thing. And also make that decision about the friction, the delay, the interdiction, or actually just putting a pause on the transaction. And Ken, we spoke to one of the larger banks in America who was saying that some banks are quite comfortable with actually sort of declining a transaction. Other banks are really, really risk averse about wanting to stop a transaction that a customer's doing. How do you find the banks kind of approach that, and that do you find that appetite does differ quite a lot?
I think more banks are willing to do it. And we're also seeing in the United States, a number of states are allowing banks to hold transactions. So they're giving them cover, safe harbor, that if they do hold a transaction, there's not going to be a legal ramification to it. And they're finding some good success in that. There's a regulator in the U.S. called FINRA, which oversees people like Charles Schwab, Fidelity. They've had that in place across the board for a long time, saying it's okay to hold transactions. And I think just people get concerned about that if they hold it, is there going to be some legal liability? And states are starting to give them comfort, some states. And so I think that's an important thing, because what you need is that hold time. Also, if you have a trusted contact, so some banks are setting up trusted contacts. So if there's a problem, they've got someone to call and say, hey, your parents want to move this money, but can you talk to them? I think it's a scam. So it's all this, there's the sand in the gears kind of things, but there's different ways to do it in a smart way. And properly holding transactions, having the trusted contact are really valuable tools. We have to slow it down and get to the point where the customer can go, oh, I think this is a scam. Let's stop the transaction. That's where we have to get to. And these scammers are so good, and the psychology they deploy is so powerful. It's unbelievable when you hear the stories. People like Aaron West interview a lot of these victims, and also you have Anna Rowe in the UK and some of the others. It's very real, the psychological impact, way beyond what you could ever believe. And so we have to be sensitive to that, as you mentioned at the beginning, Lizzie. But these victims, they go through a terrible amount. They lose a terrible amount of money. And as financial institutions, we really have to put our best A game in to stop this stuff.
Absolutely. So moving on to an area where Outseer are doing a fair bit of work at the moment on is the cash out point. So we are going to delve into money mules within the digital banking. But before we do that, Ian, I'd love you to cover off briefly, talking about some other routes out, specifically crypto and literally cashing out with cold hard dollars or whatever your currency is. What are the different routes you're seeing as the cash out mechanisms?
I think the differences are kind of summed up. Are you in a faster payment environment, or are you in a non-faster payment environment? If you're in a faster payment, they're going to try and use a money mule on there or similar. We do have cards being used, but those quite often are actually the cash out from the mules themselves to buy goods or things on there. And it was interesting because literally I've just been having a back and forth with the Global Anti-Scam Alliance about, well, how do we phrase how people cash out? And I said, well, actually, is it cashing out digitally or is it cashing out physically on there? I think this is true in the US, and I'll let Ken jump in after. There's a lot of cash out via cash because it's a non-faster payments thing. You can walk into a bank there and ask for tens of thousands of dollars because they actually have the money on hand. Whereas if you try and do that in a UK bank, for instance, they go, sorry, we only have enough money to allow you to have 2,000 out now. If you need any more, you've got to give us 24 hours notice. Then unfortunately, what we're seeing is that cash is either going to a courier to pick it up, or it's being fed straight into crypto ATMs, which is truly shocking. I mean, Ken, to you.
Yeah, I mean, you're right about that. We see people take cash out of the bank and then they go to the crypto ATMs, and they actually have photos of this and situations. So they go into the crypto ATMs and pump in $20,000-$30,000. So the combination of the cash and crypto is definitely a big deal. We certainly have the money mules. It's just way too easy to open up money mule accounts these days. But crypto and cash are a big part of this. We even see people, they'll withdraw the cash, they'll take it to a gold bullion company, get a gold bullion, and have that wrapped in someone, quote, from the FBI who's going to help protect their money while this problem's being resolved. Couriers are sent to the victim's home, picks up cash and or gold bullion, and then it disappears. So you're right. There's all three of these are very effective, and you can almost add the gold bullion to this as another way that the scammers get the money.
And the thing is, most of the money actually ends up in crypto anyway to go across borders, because transferring, unless it's going for our corporate accounts on there, you're not going to get the volume, literally the millions, tens of millions, billions in total going through. We look at what was seized from the Prince Group there. Was it 15 billion in crypto? Right. So it's shocking. I mean, it's going to end up in property or other things, but on the cash out, it's either going to a mule who then may move it into crypto or similar. Certain jurisdictions that we've discussed in the transaction point in the UK, you can't do wholesale movement out into crypto. There are limits on that because it's seen as such high risk.
Yeah, crypto and crypto ATMs have so facilitated consumer scams. I mean, crypto ATMs should be banned, in my opinion. There's no purpose other than for drug money and for consumer victims putting their money in the ATMs to go to the scammers. And some countries are doing that, by the way.
Yeah.
The FBI actually released some stats a couple of weeks ago about the amount of scams coming from the crypto ATMs and the amount of fraud coming from them. And you're talking about hundreds, tens of thousands of people and huge amounts, and that's just from the complaints they've got. So how much is going on behind the scenes as well? So yeah,
I think some of this ties back to your real-time fraud monitoring, where you've got the systems have really been designed for digital. How can you extend them now to go, I'm having information on money is trying to be moved out from cash in a branch, and actually getting that through, so there now needs to be linkages back into the branch to go, no, this is really high risk because of what we've actually seen already on, say, digital footprints and linking across channels. And that's not the easiest because a lot of the teller systems don't have that ability to actually take the feed into them.
And thinking about money mules within digital bank accounts or digital transactions, Ken, to what extent are banks at the moment seeing the mule problem as part of the problem? Why does the scam problem make this so important that banks are really scrutinizing for money mules or muling activity within their environments?
We have to remember that whether we're talking about account takeovers or consumer scams, money mules, the accounts are a key reason that occurs. And so it's a very important area. I would say banks are paying more attention to money mules now than before. And certainly, if the two things I'll call out here is the monitoring frequency. Banks have obviously done a lot on the outgoing payments, but not much on the inbound payments. And so we see that the UK is probably the first country where the Financial Conduct Authority said you must monitor inbound transaction activity. In the United States, NACHA, which is basically responsible for ACH transactions, has started to require banks in 2026 and also 2027 to monitor the inbound payment activity from ACH to look for fraud. So this becomes very important. If you don't monitor the inbound activity, how do you even know you have a money mule account? And so this is something that I believe every bank has to do it. You know, we have the sending bank and the receiving bank. It's really the same bank, but it's what activity they're doing. We've spent a lot of time focusing on the sending bank side, the customers sending a transaction, and banks have spent a lot less time on the inbound side monitoring the inbound transactions. But we are seeing that happen. And we're seeing, more countries say you have to do money mule detection. The second thing I would call out here is a receiving bank risk score or receiving bank indicators. So we're seeing more of that come about. And again, that's part of the network signals, but there's more opportunity to find out information about the receiving bank. Now, we even see it in the case of JPM Chase has a product called the Link Beneficiary System. There's a company called TrustPair, but there's a number of companies that are helping you focus and understand about the receiving bank before you send the money. And then from the network signal standpoint, from the network transaction standpoint, you're getting signals to tell you about the receiving bank. Two things that are very important in helping to identify and mitigate and remove these money mules. But it's so easy to set up a money mule account. We have to have more controls on this side.
So it sounds like there is a lot of opportunity in this area. There's signals out. There's the ability to scrutinize this more. Ian, are you finding that money muling, it is moving from that after the fact, more of an AML slant to a real-time focus?
I think that's the case. As Ken said, it's fragmented. You've got certain countries which through legislation, and we've seen clusters of those in Southeast Asia, who are going, you've got to look for mules on there. And then the UK is the only country in the world where there's a joint liability. So if someone has not detected the fraud as it actually been sent, and it ends up in you as the receiving bank, you're jointly liable. That focused the UK banks' minds. I think, you've got to have the real-time detection. It's no use going, if I'm off a typical AML system, and going, well, I found a mule. Yeah, but the money moved 4 hours ago because it's a faster payment environment. It's tying together, what's going on, where if you're seeing it in real-time detection, you want to hold the inbound suspicious transactions. And you can do that either at the inbound transaction, or you can wait until there's the outbound transaction. You're going, that actually looks so risky, not just because of inbound, outbound, but it's actually all the other behavior that's gone on before. And it's understanding the different categories of mules as well. The thing I'm going to say, which is probably going to strange coming from someone in the vendor, is we've got all of these receiving bank scores. We've got the ability to do multi-bank transaction data. I think we need to move away from vendor-specific pieces, because we sometimes a monoculture is not good for anyone. But to actually use, as Ken was saying, the payment rails, where we have the fact that we've got things being done at the payment piece in the middle, which is looking for previous patterns of behavior. But what it's lacking is, what's the signals on the sending bank? What's the signals on the receiving bank? And actually using the latest faster payment gateway rails, the ISO 20022, that allows for this information to be sent, which should be just a risk score and signals, irrespective of whether it's vendor A, B, C, D, or A. You should be able to consume it where it becomes that consortium piece there, which can be used alongside the network piece in the middle there. We've got to go to kind of what's going on at the recipient before the transaction's going out, ideally. That's not going to happen. I think we're a good 4 to 5 years away from that in a lot of cases. We've got monocultures with vendors doing it already, so they're proving how it works. But it's the fact that as you tie it in with things like confirmation of payee, where is this actually the person I'm sending to, that can be useful for breaking the spell and going through and going, this doesn't match. The consumer education, I think, is a big thing about how can we stop mules coming into the ecosystem? How can we stop people selling on accounts, renting them? How do we make them clear of the consequences of this? You could face criminal prosecution because a money mule is money laundering. And actually, a bunch of these mules may actually be multi-use as well. That's what's been found out as banks are actually investigating further. Some of these mule accounts are linked to terrorist financing. They're linked to human trafficking and modern slavery. They're linked to prostitution. They're linked to other forms of financial coercion and control. So it is, I think, where the thing that's driving it, I've seen, is actually displacement. You've got a bank which actually takes a stand first and goes, what's the scope of my problem? Whether they work themselves or whether they work with a vendor, they go, this is the problem. I start doing things about it. It's the same as your classic fraud, isn't it, Ken? They're going to displace. So if it's harder in one bank to do it, they're going to go to the next one.
They go to the easiest bank.
Always the way.
Don't need to outrun the bear and all that. Just need to outrun the other person running away from the bear.
Mules are a national security threat. RUSI in the UK said that, and that's what we've got to understand. These are actually probably a bigger threat than the actual scams themselves. These enable all kinds of financial crime. And at the moment, we're still looking at the tip of the iceberg on it. Law enforcement is getting probably 100 for the cases. The data we're seeing from banks is probably maybe 1/10. When we look at the volume of fraud going out there, that's the full amount. And these numbers, they're showing what proportion we're not even thinking about in terms of the cash outs.
And Ian, I know you talk about the different sorts of mules quite a lot, varying between the witting, unwitting, complicit. With the unwitting, that's where there is a lot of crossover with the scams, right? That people can
Exactly right.
Becoming a mule when they don't know what they're doing, or they don't ask all the questions they should ask. How does that tend to work?
Well, if you think, it's the awful fact of the matter, if you've got, say, a romance scam victim, they may be running out of money. The person in the scam center who's doing it knows that. So they then use them as a mule and say, well, we're going to send you some money through on there. This is actually some of the money to release your funds, for instance, or I need this is coming in from someone else. So they get another 10,000 coming in. They then send that on. So not only have they lost all of their own savings, they're now finding that they could be financially excluded because they're considered that they're money laundering. Their account is closed. They're put under suspicion. They then can't actually rebuild their life by actually going and taking out loans to just pay off the debts they've got in some ways. So this is where I think it's the more signals we can get on there. It's all about signals. Going back to the transactional side is what's going on at the transaction, but what's actually going on at the victim compromise. Is there signs of them being compromised? Or is there signs that this actually is a complicit mule, and distinguishing between those who have been caught up who are criminally coerced versus criminal, I think is the key piece. And that's where more work's going to be done over the next year or two.
Absolutely. And at the outbound payment, would you be looking at signs from the victim compromise, like what's going on in their account when you're looking at the risk of that transaction, whether it be for a scam or for a mule?
Yeah. So when we look at it, if you've got a mule, you can see on those which are the criminally inclined mule, so the witting who are selling on, or the complicit, you're going to see that they're not operating like a normal account. They may not, well, they're not going to have a salary coming in. They're not going to have normal direct debits or standing orders or outbound payments on there. There's going to be multiple devices, multiple people behind it via behavioral biometrics. They're going to have geolocation mismatches and other odds and ends there, because you're going to have a mule herder coming in there who's watching over it. And that's going to be very different to, say, a mule who is the unwitting type, where they're functioning absolutely normally up to the inbound payment and then the outbound one. But it's about trying to put it together and actually although leaving it to the outbound payment, some would say, well, that's a bit late. It actually gives you much more context, and you're not likely to debank someone who actually is kind of more innocent around this.
Yeah, it can be where the strongest signals are. And I guess one
Yeah.
of the things to call out when this whole framework is talking about different controls, but a lot of this it's really when they work together that you get the accuracy. So it's thinking about what the framework, how the controls fit in there, but also how do they all work together to really inform a better, more accurate
What,
risk.
and that's what you're describing with what we've actually done on developing the Outseer Mule model, where we've taken the ensemble of all of the signals there and being able to put it through and actually fit back into a bank's normal operating, where you've got your fraud ops teams on there. If you're able to say this looks like a mule rather than a fraud or a scam, then it actually becomes a better delineation. And going back to Ken's piece, it allows you to actually tailor the behavioral science of it and how you actually speak with a person. You actually know that this is a mule rather than a scam victim, for instance.
Yeah, a recurring theme is really understanding how the behavioral science and the psychology behind the scams, definitely. So thinking about post-attack, Ian, how do you frame this final piece of the attack chain?
I think a lot of this is you've got to look, how do we actually do data sharing? How do we do the intelligence? How do we feed it between banks? How do we get it into a consortium, whether it's vendor or into something like CIFAS in the UK, who I believe is the gold standard there for looking at what's going on. That includes mule data sharing on there. We've got the Global Anti-Scam Alliance, which is now doing their global signal exchange. So there's no shortage of these. And actually, the more data, the more you tap into it, the better you've got. Really, it's about also customer treatments post-attack. You've lost the money. How do you deal with the customer? How do you deal with them on the worst day of their life, potentially? And that, I think, will distinguish, or a number of banks are now starting to move forward on that. And they're not just going, it's not my problem anymore, to actually, well, actually, it is some of my problem. And if I don't make it my problem, the regulator's really going to make it my problem.
Yeah, and hopefully we'll see more and more momentum in this area.
Yeah.
Ken, an example that I think we referenced in passing earlier, but I think is an important one to look at in a little bit more detail, is the Australia Scam Prevention Framework. I think it's a good example of regulation that I know that you've done a lot of work to look at in detail and dissect. Can you give us your appraisal of it? How do you think this fits in with a framework that will effectively prevent scams and look at it from a cross-industry perspective?
Sure. So Australia is probably most interesting, where it's the first country that's come up and said, I want banks, telcos, and digital platforms to participate in the scam prevention program. And so all three of those entities will have responsibilities to add controls. And if those controls are not properly in place, then these entities, the banks, telcos, and digital platforms, can be either fined and or required to reimburse the customer. So it's a very bold plan. The legislation passed back in February of 2025. The legislation itself was a little bit thin, and the plan was, here's the legislation. Now we'll have the Australian Treasury add the details to it over time. And what happened was, in November of 2025, so about 7 months later, the Australian Treasury came out with a consultancy saying, here are the controls that we're proposing, and here are the ways we see reimbursement working. So that's kind of where we're at. There's about 30 plus controls that they've identified, that some are across the board for banks, telcos, and digital platforms, and some are specific to each one of those three sectors. Unfortunately, what we're seeing at this point is there are a number of challenges coming up as to how this scam prevention framework will actually be deployed. One of the most disappointing aspects is that there are a number of exceptions to these sectors. So as an example, non-bank payment services providers are excluded. That's a big exclusion. We also have dating sites excluded. And if you can believe it, online marketplaces are excluded. Cryptocurrency exchanges and crypto ATMs. So what started out to be this whole of ecosystem approach, for a number of reasons, and I'm not quite sure what they are, they've excluded so many big entities as to how this thing will be when it finally launches. That's a big concern. Another concern is that the specific entities, the banks, telcos, and digital platforms, are the ones who will self-certify that they are compliant with the controls that are being defined. And unfortunately, the way the controls are being laid out in this consultancy is they're almost a little bit too general or too loose to be able to figure out, well, am I meeting that or not? So if it's the entity itself that does the determination about compliance, this certainly puts the consumer at a disadvantage as to whether they should be getting reimbursed or not. And the plan is that this will go live on July 1, but the external dispute resolution won't go live until January 1 of 2027. When I look at this today, I think there's still enough open items, and there's, by the way, a lot of concern by the consumer groups that by the time Treasury receives all the responses coming back, and they were due back on January 5th, I'm not sure this will actually launch this year. There's just a lot of open questions. So you can see by the shield we have up there, it's a very bold plan, but I'm starting to see some cracks in the shield. Now, to be honest, there's still time for corrections to be made. And I even took the time to put a submission into the Australian Treasury saying, look, here are some things to consider. So it's a very bold plan. It includes the banks, telcos, and digital platforms. But I'm taking a deep breath because there's a lot of work still to be done this late in the game. So we have to watch it. What they want to do is bold, but I kind of share the concerns of the consumer groups that, there's just too many gaps here as to how effective will this really be for controls coming in place and reimbursement taking place.
It sounds like a lot of positive steps, but some challenges as well. So, Ken, I know you'll be watching this space carefully, so we'll follow your commentary on it, and also working with banks in Australia on their commitments and the controls they have to pull out there. We've covered a lot of ground. We did want to summarize some of the things we talked about in this slightly simpler two-way dual approach that Ken provided. Ken, can you quickly talk us through this? What the crux of it? What are the two kind of sides of these pillars that banks need to be focused on to really address the scam problem?
Okay. On the left side, we have pillar 1, the scam transaction alerts. On the right side, we have pillar 2, the customer scam interdiction. I highlight this slide because so often we spend most of our time on the alert side, doing the anomaly detection, figuring out how we can alert, is this a scam or not? And we've covered a lot of that today. But the rubber hits the road when we have an alert and we have to talk to the customer about it. And this could be an alert was generated, and so the fraud analyst is going to call the customer, or it could be the customer walks into the branch, withdraws cash, wants to do a wire, and that the teller, who's maybe 18, 25 years old, at that point, they have to interdict with the customer. And my point of this slide is we have to make sure we spend the proper amount of time on the interdiction side, training our staff, understanding the psychology, because if the interdiction fails, then the most powerful alerts we had just became worthless. And so we really have to focus on the training of the people in the branch, the training of the fraud people who are going to do the call, because that's important. And as I mentioned earlier, it's almost like you want a psychologist on your shoulder when you do this. And so not that we spend the same amount of money as we did on the alerts, but we need to spend a meaningful amount of money and constantly update the game plan on interdiction. It's not a one and done. And that's the most important takeaway from today, is focus on how your staff will interdict with the customer to keep the money in the bank.
Mm-hmm. Yeah, and this goes back to some of the things you were talking about earlier, Ian, around contextual alerts and understanding, we certainly as outs here, we can provide a lot of signals and get that visibility into whether something is a risky payment. And it's then providing the ability to go and provide contextual alerts or train your staff to deal with it. So you're not just, I think people just zone out of blanket, are you sure you want to make this payment alerts? It needs to be specific to that experience of what they're doing, what their behavior and what the transaction is, what behavior is actually happening. Would you agree, Ian?
I think so. It's the fact that it's humanizing it. It's not just, oh, you're making a payment. It's not just lip service. It's the fact that, banks are stopping it. We've got the catch and release, as Ken's talking about there. When you catch it, you've got to stop the customer from releasing it because they're their own worst enemy, because they're under the control of a malicious entity. Let's be blunt. It's not the customer's fault. And what I'm pleased to see, having spoken with a number of victims over the last few years of scams, we can't victim blame anymore. That seems to be going away in the media as well, thankfully. It's very much, we've got to just try and educate and understand that these people don't actually realize what they're doing. They honestly believe all of this because they're under the spell of someone else.
Absolutely. So thanks, gents. I think we've covered off a lot. If you'd like to dive into any more of the controls, as like I said, we did not quite manage to cover all 70. There is more detail in the white paper. It's there's a link in the resource center. You'll be able to download it straight from the webinar platform. And this is actually something that we're going to be keeping up to date. So there'll be another rev at some point this year. Ken, I know you're already busy squirreling away some more controls to put in the next revolution. What's standing out at the moment that's come out in the next few months that you think is really helping move forward our bank's abilities to carry out scam prevention?
Well, we will have volume 2, and the reason we'll have it is we're seeing a lot of additional controls. And so, I mean, an example of one in Indonesia, there's an online reporting system that allows consumers to quickly have the ability to block accounts of the online fraudsters. So within 15 minutes of a consumer reporting a scam and identifying the receiving bank account, they can put a freeze on that account until it's investigated. Something as simple as that. But we have, a lot more controls coming up. So you're right. Volume 2 will be out in a couple months, I think.
So watch this space. Yeah. So thank you so much, Ken. Thank you, Ian. Thanks for your insights and the hard work that went into compiling this research in the first place. I think it's a really important piece of work that a lot of banks can take a lot from. And thank you everybody for tuning in today. We really appreciate your participation and hope to see you at another event very soon. So thank you and goodbye.